Okay, good evening, everybody. Let's go ahead and get started. Want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know that it is indeed working. Hope everybody's had a fantastic evening so far. Looking forward to our COT report webinar tonight. Got a couple of things prepared that I'd love to share with you guys. Just really want to talk a little bit about the scanner and talk about the different findings I have on the COT data right now, and just kind of show you guys what I think the banks are up to and what they're looking to buy and all that kind of stuff. So I think this will be really good. Before we get started, as always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. Well, we'll keep tonight's class a little bit short. We'll just, in fact, I don't know if we'll do it traditionally. I don't know if we'll go into like the actual CFT site or CFTC website. We're probably just going to look at the COT data on the scanner itself and talk about what I think the banks are going to be, what the narrative is for the banks right now, what they're trying to do, some of the big highlights that way. I think that'll be really, really good. So, um, okay, great. Well, just, because I know some people are watching this on YouTube, I want to make sure that you guys at least know what the COT data is. So, real quickly, before we jump into the scanner, COT report data is basically here. I'm going to pull up the website. COT report data, it stands for Commitment of Traders. The CFTC, they're a U.S. government regulatory authority. And what they do is they release what's called the COT data. And it stands for Commitment of Traders. And it tells us what the banks are buying and selling each week, which is really important because if we can see what they're buying and selling, then we can kind of get an idea of what their narrative is, like what they want to buy, what are they hoping the direction of the market will go. And so we have Steve Scanner and we have the COT scanner. What I like the COT scanner for, which is what you're looking at here, you can access this right here on the website under members. You just click on COT scanner. What I like so much about the COT scanner is you can come in here and you can filter the different percent change week over week. So I can click on this in each column and it shows me and you what the change in the shift was this week or this month. Um, and then if I go to the 2 week shift, it shows me what the shift was, the percent change by the banks over the last 2 weeks. Or if I do this over the last 3 weeks, I can filter this, over 3 weeks and so on. So why is this important? Okay. So for example, let's go back to the 1 week. If I filter this by the 1 week shift, the biggest shifts come to the top. Okay, so you'll see 25.31 on the NZD CAD. Then you got 23.83 on the pound CAD, plus 18.55 on the USD CAD, and so on. Okay, so this is important because if I can see what they're heavily buying this week, then that might determine if I want to buy as well this week, or maybe I want to sell this week. Um, if I look at the 2 week shift, the reason why this is important is because if I can filter this by the biggest shifts over the last couple of weeks, and that tells me that the banks are really trying to buy, this currency pair, right? Or they're really trying to sell it, right? Like if I filter it the other way, I got the CAD yen, which comes to the very top, and it's had some pretty big negative shifts. So maybe the banks are looking to sell the CAD yen here soon, right? If you look at the 3 weeks, so when you expand out and go from 2 weeks to 3 weeks to 4 weeks and 5 weeks and so on, when you filter these, you're getting a more broader perspective. Okay, what is it that they really want to do? Okay, so with the euro pound, you got these big negative shifts. It looks like they want to send it lower, right? You look at the 4 week shifts. Oh, looks like they want to send it lower over 4 weeks, over the last 4 weeks. Okay. When we look for trading opportunities, we usually filter by the 3 week shift. Now, why do we use the 3 week shift so much? Can we even built it into Steve's scanner because it's that important? We like the 3 week shift because the 3 week shift tells us what the um, agenda is. So, an agenda or campaign is when the banks go out and buy something for 2 or 3 weeks. Sometimes, if they buy something just in 1 week, it doesn't necessarily mean that they have this huge commitment to it. But if they buy something consistently over 2 or 3 weeks, sometimes up to 4 weeks, then we know that the banks really have some kind of, they have some kind of uh, a commitment to that currency pair, right? So you look at the pound CAD and it's a 49.26% positive shift. What does that mean? Well, it means that the banks have increased their positions by 49.26% over the last 3 weeks. So if you think about it, of all the positions they own on the pound CAD, nearly 50% of all of it was bought in the last 3 weeks. That may not sound like a lot, but I'm telling you, for the banks who own everything, for them to increase their positions by 50% is a pretty big deal. So they obviously have a hunch that the pound CAD is trying to go up. And if you actually look at the pound CAD, I think it has been going up. In fact, let's go take a look at it. I think if you look at it over the last like couple of weeks, or several weeks even, it's actually been going up big time. Yeah, so here's the let's see, let's do the last 5 weeks. So I'm going to use this week to week indicator. So yeah, this is the last week right here. This is 1 week between this yellow line and this yellow line. And between this yellow line and this yellow line, that's another week. And between here and here, that's another week. And so on. So this is 1, 2, 3, 4, 5. So 5 weeks ago, they started to buy this down in the gutters down here. And every single week, they've just been buying, 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 buying. So what has the market done in response? Boom. Clearly a move to the upside. So this is a very interesting pair to look at right now because, like I said, obviously the banks have been trying to buy this and the market has in fact been going up.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
And actually, if you look at the individual weeks, let's go back to the COT scanner, you can see, okay, well, like let's actually just search the pound CAD in the search here. Yeah, this last week they bought a bunch and they bought a bunch over the last 2 weeks and 3 weeks and so on. So they just continue to buy. I don't know what it is. They just, over the last 5 weeks, it's been a huge transition to the upside. So if you go look at, let's go look at the pound cat. So 23%, that's nearly half of their buys were placed just this last week, which is crazy to me because the market's been down actually since Friday or Thursday last week. Yeah, Thursday this last week it came down. And now it's kind of sitting right, right here. But it does make you wonder with how much they bought last week if they're going to continue this rally to the upside. We'll find out. Not certain, maybe this actually goes down first, and then goes up later. But they've definitely been buying this pair, that's for sure. So, and it's been going up, and that's what you would expect, which is pretty cool. All right. I'd say Roger says, I learned something new on this webinar every week. Wouldn't miss it. That's awesome, Roger. I love it. Appreciate the optimism. I love that. That's great. Yeah, and we need to go to lunch too sometime. I've been saying that. And we went to lunch, what, a couple months ago. We got to do it again. So, yeah, I'll text you. In fact, I'll text you right after the webinar. Maybe we can coordinate a time. That'd be great. Um, okay, great. So, let's see here. Okay, so let's go back to the COT scanner. Let's look at a few more. So what I like to do with the COT scanner is when I have free time and I'm looking for trade opportunities. My favorite trade opportunities from the COT scanner are when I can see a 3 week shift that's positive or negative, and the banks are actually losing money. So that might be kind of a weird concept for people. They might look at this and they'll be like, "What? How are the banks losing money on a trade that they take?" This is kind of a foreign concept because I think most people who are traders, especially newer traders, think that the banks are infallible, like they always win or something like that. They actually take bad trades. Okay. It's like, not always, like they definitely have their winners, but they actually do get into bad positions. So I don't want everyone to think that the banks are just picture perfect and they never lose and that they never carry a drawdown. No, they carry some of the biggest drawdowns you've ever heard of. Okay. They really do. And I've seen it on the COT scanner. They even get into positions at the wrong time. I just saw that on the pound CAD. They bought a lot of stuff on the pound CAD just right over here. A lot of buying going on, and they're losing on that trade right now. So, you know, in order for them to make money on the buys that they took up here, they need this market to start to rally to the upside. So maybe that's what it does. Maybe this is just a short period of time and the market actually is just gearing up to continue the rally. We could definitely see that. But it's an interesting thing. Anyway, so they're not infallible. So make sure that people realize that. Oh, that's interesting. FX Blue sentiment is 50-50 on the pound CAD right now. Oh, that's great. Um, that's actually huge. Actually, I want to see what sentiment says over here on our sentiment index right here. I'm just curious. Um, okay, let's see where pound CAD. Okay, it's actually 79 over here and 20%, 79 and 20, which is still good though, because if you think about it, they're not quite to a breaking point yet. A breaking point would be if retail got up to like 90%, 95% short. So there's actually a lot of room, in my opinion, to see the pound CAD actually start to continue to the upside and kind of wreck the retail traders. Yeah, exactly. Yeah, that's great. Okay, cool. So let's go back to the COT scanner and I want to show you guys let's go find, like I said, let's go back to finding the best trades, right? So when I have some free time, I'll come in here and I'll be like, okay, let's filter by the 3 week shift and let me find currency pairs that have not actually gone in the direction that they're suggesting or whatever, right? So let's find let me see if I can find one like because I feel like a lot of these have actually gone in the direction that they're supposed to go. Let's look at the pound yen. Yeah, that's a pretty positive shift, 27.42. Let's see what it's done over the last 3 weeks. Okay. Um, okay, so the last 3 weeks, it's slightly up. You can see this. Here's 1 week, here's 2 weeks, here's 3 weeks. Okay, so for the last 3 weeks, this is where the market started 3 weeks ago, and this is where it is now. So it's been slightly up. It's been trying to go up. It's not up a lot though. I'd love to see this down here. What if this was down here and the banks were buying? Oh, that would be nice. Okay, so this could be one, but let's see if we can find another. Okay. Let's truly find one that's gone in the opposite direction of the banks. Let's look at the pound Aussie maybe. I know that's down this week. Let's see if it's down overall. Okay, so pound Aussie. Okay, so pound Aussie. Yeah, this might work actually. So pound Aussie is down this week for sure, and last week it was down a little bit too. So this one, um, last week the banks bought, they bought over here, they bought over here. So this is the last 3 weeks, and the market's actually down. This is a prime example of what I'm talking about. This one may run into some kind of demand soon, and we could actually start to see this one rally to the upside. So this is definitely one I'm going to keep on my watch list because, yeah, if you go back to the COT scanner, you can see, let's actually just search pound Aussie by itself. Yeah, look at this. Last week they bought 13.94%. Over 2 weeks, they bought 25.4. Over 3 weeks, 35.8. So they're definitely buying the pound Aussie right now. And the market has actually gone contrary to the banks. Um, so when I see this, the banks, in order for them to win and get their money back, they need this to go back up. Okay, so however that happens, it'll likely happen. So they usually, they're probably carrying a drawdown. They probably took a bunch of buys up here in this area and this area and this area over here. They probably took a lot of buys and they're just regretting it right now. So for somebody like you and me, I can't fix the trade because I don't have enough money to send the market to the upside. But the banks do, in fact, have enough money. So if they want to fix this, my guess is they'll find some kind of demand zone down in here. They'll find some kind of demand area and maybe even let the market continue to melt away a little bit. But then they'll get their nice move to the upside type of thing. So I could see the pound Aussie formulate here a move to the upside incoming soon. And when that move to the upside comes along, um, they'll fix their bad trades. My guess is they'll actually use some of these areas down here to buy more. So yeah, that it's definitely possible we see this do exactly that. So okay, let's see. That's a good example. Let's try to find another one, and then maybe we'll just do one more. Like I said, we'll keep this webinar short, so I don't have much else to chat about. But maybe let's find one more good example of one to keep on your watch list. Maybe let's find one that's short. Okay, so here's the Aussie Kiwi. This is a short opportunity. Let's see if the Aussie Kiwi's gone down over the last 3 weeks. No, it has not. Um, well, maybe, well, actually, let's look at this closer. Okay, so um, this one 3 weeks ago was right here, and it's currently up here. It did have some moves down right here where the banks probably made some money. It had a little bit of a move down right here, but this week it's in fact up big time. So this one's kind of interesting because, we have right here on the COT scanner that the Aussie Kiwi does in fact have mostly shorts over the last 3 or 4, even 5 weeks. And last week they added more shorts, and the week before they added more shorts. So they have to be losing some money right now on this trade. So this is another one to keep on your eye. Like maybe this one finds a zone. In fact, I actually see a good imbalance right here. I'm going to draw this out. So there's an imbalance zone right in here. That's an imbalance right there. So that would be interesting to see because if this went up to there, my suspicion is that it would collapse quickly. Once it got up to there, it would just pull back very quickly. So this is another example of one that I'd probably be using. I'm going to keep this one on my watch list here because this one clearly has exactly what we're looking for. The banks are actually losing a little bit of money on this trade. They're caught off in the wrong direction. And so if we can see this pull back, find a location where it's likely to pull back, then usually you can get a pretty good trade out of this. In fact, I might even place a signal right up here to sell at the beginning of this imbalance, stop out at the top of the imbalance, and then write that down. I think you can get this. This is an imbalance, by the way, because back over here, this was a huge candle to the downside, massive candle. And so this is called also as an inefficiency candle. And so you have to go back and find previous liquidity in order to find where the market's likely to turn. And so I think this is it right here. I think this is about where the market would come up to is this little area. and then it would pull back from here. So this will be a really good trade to have sitting around just pending until it finally triggers. Um, yeah, I might do that actually with you guys. I might place that little trade there. Well, it's actually a big trade. But yeah, I think the banks are going to try to fix this. And I think that's a possible, plausible area where they might go to fix this trade. So I just look for this kind of thing, this kind of phenomenon where the banks are losing money, and then I try to go in and find places where they're likely going to strike and send the market the other direction. All right. In fact, I might even post that. Like I like that one enough just to have, just as a pending order that could sit there for, 3 or 4 days. Um, and then if it triggers in 3 or 4 days, great. But at least you had it in ready to go before it even happened. So all right, guys. Well, appreciate each one of you. Thank you, Roger. Appreciate your comments. Thanks for coming. And um, yeah, I'm looking forward to the rest of this week. Hopefully, we can have a solid rest of our week with those weekly trades. Hopefully, the rest of them do well. I'm looking forward to closing those Fridays. So, all right, guys. Well, have a fantastic rest of your evening, and we'll see you guys in the next webinar. Thanks for coming.